What's going on, everybody? It's your boy C-Zar, and we are talking about KTA, KEETA, the cheetah today. Hit that like button, you guys. Subscribe if you want to see more content like this, and let's get into it, my friends. It is the 12th day of October, and here we are sitting at about 40 cents in price. The market cap overall for this thing is at about $172 million valuation. That's actually pretty cheap for this thing. I think that we could see a multi-billion-dollar valuation by the end of this cycle, undoubtedly. I very much believe that we're at a good price to buy. We're going to go over some things, some key indicators in the charts that show what I'm looking at here and why I believe we're about to get a rip that's going to take you probably all the way back to about 85 cents or beyond that, right? This is kind of the line in the sand that I'm looking at. It's like something like right around here, right around there, right? Prior support there, prior resistance, kind of in the heart of this overall zone. We're going to get into this stuff in a second, but I want to look at the 1 hour time frame first. Okay, so looking at the 1 hour time frame here. For those of you that don't know what KTA is, KEETA, it's a layer one blockchain. They're establishing, they've got a whole mess of things that they're establishing that they're trying to go through. I think it's a DeFi protocol, or maybe it's just a finance protocol. I don't know. It's been a while since I've read up on it, but there's some big things. Let's just actually look up what is KTA. I have read the white paper. It's just been a second. I read so many freaking white papers too. KEETA. KEETA, a high-performance layer one blockchain designed for global finance. Yeah, so it is. It's so maybe not DeFi, but just to bring in the financial sector. That's my thoughts. It aims to unify transactions across different blockchains and fiat payment systems, offering high-speed scalability and on-chain compliance protocols like KYC and AML. Yeah, they have a KYC stablecoin that they're making too. Anyways, 1 hour time frame here. Getting rid of this here. And isn't there somebody who's like big with Google that's a partner with them, or maybe there's a falling out? I don't remember. But that's all just kind of fluff, anyways. 1 hour RSI looks positive here. The reason why is because you've looked so negative. You've lived below the 50. You've been oversold. You've been living in this little box of horror and destruction, and now you're back above it, looking to find support here. I think that you will find support here. Finished off with some bullish divergence there. You had a higher low kind of dynamic right there. Lower lows in the price. Nice move up. Not a whole lot of volume on the way down. Good bit of volume on the way up here. And again, less volume selling right now. I think that you're just seeing some volatility alongside with Bitcoin and the rest of the markets. But you're probably going to be moving up here pretty damn soon. The stochastics would suggest that we go lower. And the MACD right here, it is the 1 hour time frame, but the MACD right here is crossing the zero. There's some confliction in the chart. We're going to do one of two things. Either one, we're going to come down a little bit lower, or two, we're going to bounce like right here, right now. I don't know. Let's look at the 15-minute time frame. I don't know. It's not helping me. We'll see. We're either going to bounce here right now, or we're going to go lower. And if we go lower, it is possible that we see a lower low, but I think we'll find a higher low. And in which case, who cares? 40 cents right now, 4 hour time frame. The RSI looks bearish, making me think that we would go lower, like lower than this low. Stochastics look bearish here, agreeing with that. And the MACD, though you've crossed green, that might be your one kind of silver lining. Though you've crossed green, you can still go lower. You do have bullish divergence on the MACD and the stochastics, in all fairness. There is even bullish divergence there at the bottom, but you've already seen your move happen. I want to say that you're going to go lower. I feel like that's what I'm being pulled to, but something in me is telling me that we're about to bounce, actually, that we're about to rip probably all the way back to 60 cents. I feel like if you look at it here, we've just kind of been hugging this line gradually, and now we're here. We're probably going to find support or resistance somewhere up at like the 60-cent area, come back down, and then move higher. That's my thoughts. I don't know. Time will tell. We'll see. Looking at it here, like you're in this zone overall. The daily is where things start to get really exciting, okay? Because you look at the daily, you look at where you are overall, and you're just below this low, right? For months, that was the cherry on top. Man, if you bought on this wick at all, you're a genius. Now you're below that wick, entirely below that wick. I think it's a prime opportunity to buy. I think we've seen 1, 2 moves down. Maybe we get a third move down, whatever. But I think we've reached far enough. The volume is completely absent. It's gone. It doesn't exist. And it only exists whenever we're really buying, whenever in buying moments. Whenever you see the volume die off as we're reaching lower, it's the same thing as like whenever you're reaching higher, right? You're reaching higher and higher, and your volume's just non-existent here. in comparison to what it was whenever you were buying. So then what happened? Then the selling pressure came in. Then the volume came back, but to the sell side, right? You're moving up higher and higher. You're trying to break out to new all-time highs, but guess what? You didn't have as much volume as you did back here. You even had a decrease in volume as you're moving higher, so you sold off. Same kind of concept. Whenever we're moving lower and lower and lower, and the volume's dying off, the move's coming to an end. Undoubtedly, it's coming to an end, and you're probably just finding support right here in this area, right at about 35 cents to, well, where you are now. So if we do go lower, 35 cents will embrace us with a very warm and solid grasp, and then we'll rip. We're going to rip. I wouldn't be surprised in the least. Can I find an example of this? I want to look at Ethereum. Let me just see if I can show you guys what I'm talking about. Let's see. Yeah, something like this, I suppose. Maybe not. Where you're finding support. Look, you're in this range. You're in this box of a range. Okay. This might not be the best example. I'm thinking of a crypto. I just can't think of what crypto was. But there's just essentially this, where you're in a box. You get your lower low, and notice how when you move up here, you have an easier time moving up than you did the either two times. Same kind of idea here, right? KEETA, KTA, from this area, you moved up rather nice. From this area, you moved up rather nice as well. You're in this same kind of box dynamic here. I would expect that from this area, where you moved and you stopped here at about, what is that? At about 85 cents, I would think that you rip to that exact price, if not higher, because I think you're going to have an easier time moving up. You've consolidated. The main thought that I'm trying to get out here is you've already consolidated in this range so much that when you move up, there's going to be less doubt that you're moving up to new all-time highs. Right here, it's like, okay, are we going to see a new all-time high, or is it a double top? You know what I mean? Here, you're bouncing at the bottom. We move up here. If you came back from this lower low and you're coming back strong, the thought here is not, okay, we're going to reject here and then go lower. The thought here is that, okay, we're going to new all-time highs. Therefore, I would think that you have an easier time moving higher. And again, just looking at this the past couple of times, imagine being here on this day, the 17th of May, 2 days later, you're up a whole 121%. Imagine being here on the 22nd of June, and then the next day you're up 106%. I'm just saying from here, we're going to blink, and KTA is going to be like 100% or more in value from what it is now. That'd be my expectation. We look at the daily time frame. The daily RSI is at the lowest levels that we've seen on this chart, which is like the all-time history chart here. Lowest levels that we've seen, which isn't necessarily a good thing. People look at that and they say, oh, that's a good thing. It must be time to buy. Not necessarily. Lowest levels means you're at your weakest readings, but I don't think this persists. So yes, in this instance, yes, I do think that it's a good buy time. The stochastics are weak as well. And the MACD, this is the one thing that has me really bullish, is that the MACD has some very severe bullish divergence. You've got 1, 2, 3 drives of bullish divergence. That's triple bullish divergence at the lows here, at the weakest parts on your RSI. Your stochastics are crossed up, looking like they do want to come back up again. I think, and the MACD too also looks like it's close enough to where you're going to see a cross here pretty soon. I would think that over the coming days we do move up. And again, the snapback, the reality of this, once it hits, once we are up here, there's going to be some FOMO. I really wouldn't be surprised at all if we pushed $1 or through $1, even by the end of next week. It's the 12th now. Watch, by the 20th, we'll be at $1 or at least 85 cents. And then from there, now it's the fun part. Now it's the exciting stuff. Now that we're done deciphering this range, let's talk about future prospects, okay? What I'm going to do here is I'm going to take this high to this low for a Fibonacci retracement. I'm not going to take this low because we're going to count this as a fake out low, okay? If you're saying, well, that's not fair, you should take that low. Look at the price here. It's at 246. If I take this low, it puts that price up to 253. So if anything, I'm being conservative here. But this is how I do analysis. I've been doing technical analysis for 10 years. I've been using the Fibonacci as my bread and butter in this analysis for 10 years. High to low, not the fake out low. That's how I do it, and that's how you should do it. That's how anybody should do it. Don't take the fake out low. This is the retracement we're measuring. We're not measuring this retracement. There's too much stuff in the middle there, right? We can measure this retracement, high to low, and maybe there's some fibs that'll overlay with that. I wouldn't be surprised. They're very similar, right? Very, very similar. But I'm going to take this all-time high to the low of this range, not the fake out low. That makes more sense to be substantiated, in my opinion. 246 is the minimum target. $2.46 is the minimum. We're at 40 cents. $2.46 is the minimum target. Minimum target for what? The next move, which we're about to start. We're at the low right now. How fast can this thing move? I don't know. We're on a 3-day time frame. We've seen crazy movements before. We've been accumulating, consolidating now since really, May. I can only imagine that in this double bottom fake out scenario that we see something that's rather robust coming out of this. I wouldn't be surprised in the least if by the end of October, KTA was at 246 or higher. That's a 6x to potentially a 10x move. 246 to $4, $3.99. That's the golden ratio. The golden ratio is at $4, okay? And truthfully, I would expect that we continue on past that. Just by the end of the month, we could be at $4 to $2.46. I would expect that we're somewhere in there. That's why I bought some KTA. I bought some KTA, and I expected that we drop a little bit more, so I have some dry powder on the side to DCA down. I am probably going to buy some more if we go. I'm probably going to buy more at this level, honestly, just speaking plainly. I think KTA is about to rally. And beyond that, I wouldn't be surprised at all if we saw a price all the way up at about $5.80, $6.80, and beyond that. $10 is the minimum target from here by the end of the cycle. Let me say that again. $10. So by the end of October, $2.46 to $4. By the end of the year, I honestly think that we're going to see a $10 price. But at a bare minimum, by the end of the cycle, which is different than the end of the year, so the end of the cycle will be in Q2 of 2026. I would think that we're at a minimum at $10, or more likely, because given the time frame that I've given already, I think we'll be up here, right, end of October, up in this area, consolidate, reaching for this area probably by the end of the year. Going into the end of the cycle, I would think that we're reaching for prices that are all the way up at $65 or more. Yes, $65 or more, which gives us a grand total of a 162x. From its current market cap, a 100x would give you about a $17 billion market cap. You add another 62x to that, and what is that? That's about, you're at about like a $25 billion market cap there, right? Give or take $5 billion, right? What's $5 billion between friends? I would assume, right? Because if it's 17 billion, you take half of that, and that would be 8.5. 17 plus 8.5 is 25. It's like 26, maybe a little bit more than that. So probably about $30 billion, $30 billion market cap. I was doing quick math, but then I tried to do it. I redid it. It's probably around $30 billion, okay? Very achievable market cap, very attainable market cap, especially for a layer one. I can't believe that KTA is this cheap, you guys, genuinely. It's probably the top layer one blockchain on base, okay, on base. And there's some very important things going on here. We look at KTA, KEETA on x.com. Let's see. Calling on blockchain developers to build on KEETA network. KEETA is committing 1 million KTA to our developer grant program rewarding. That's awesome. So hey, if you're a dev, you can get rewarded and probably paid out handsomely, honestly. 1 out of 6. KEETA will be launching KUSD, a KYC compliant stablecoin designed for institutions and TradFi customers. That's awesome. 1 out of 6. Let's see what else they're going to put up here. 2 out of 6. KUSD will utilize KEETA's native KYC framework, meaning every address that holds or transacts KUSD is verifiably linked to an identity. Okay. Which is pretty big if you're looking for institutional on-ramps, right? In today's system, here's why it's big. Regulated capital and DeFi exist on opposite sides of the wall. Yes, so they're trying to be a merge. Okay, so that's nice, right? Tapping into that. I don't need to read all that. I think that I got it just from that first bit, right? KUSD removes this wall by enabling regulated entities to utilize DeFi's features and performances without compromising compliance. I love how KTA doesn't, they talk about DeFi, but they don't define themselves as DeFi. They're not buttering the bread. They know, they're like, hey, we're going to be centralized. We're going to be a point of authority, but we're going to use aspects that are decentralized to get things done. Anybody can participate, but you have to use our compliance systems. Anyways, I think that's really big. I think KTA is building out a solid framework, and again, partnered with some pretty big names. Expecting big things out of this project. Absolutely, I am. Sorry. Whew. And we're thinking that by the end of the cycle, genuinely, you'll probably be at like a $40 to a $70 price by the end of the cycle. You're at 40 cents now. So immaculate growth, immaculate potential. I don't have anything else that I want to say. I've said it all. So hit the like button, subscribe. Thank you all for being here. I'll see you on the next one. Take care. Bye.